morning, good morning, students. In continuation with our chapter 4, accounting ratios, where we all know about the meaning of ratios, its analysis, correct, and how can we express ratios, correct. So we all know that ratio is an arithmetical expressions, and when this arithmetical expression is using accounting information, then it is known as ratio analysis. Okay, it can be expressed in four forms: pure, percentage, times, and fraction. And many times we express ratio in days also, if we are supposed to find out average collection period. Then we took up the objectives of ratio analysis, the advantages and limitation of ratio analysis. Okay, now when we understood the classification of accounting ratios, then we came to know that there are basically four classification of accounting ratio. The first one is liquidity ratio, which includes current ratio and liquid ratio. The second is solvency ratio, which includes debt to equity, total assets to debt, proprietary ratio, and interest coverage ratio. Then we took the third category, activity or the turnover ratio, which included inventory turnover ratio, trade receivable turnover ratio, trade payables turnover ratio, and working capital turnover ratios. And in the last category, the profitability ratios, we understood the name of gross profit ratio, operating ratio, operating profit ratio, net profit ratio, and return on investment ratio. So in all there are 15 ratios, 2 from the category liquid ratio, 4 from the category solvency ratio, 4 from the category activity turnover ratio, and 5 from the category profitability turnover ratios. The total comes to 15. Now in this class we are going to start with the liquidity ratio, that is divided into two parts, current ratio and liquid ratio. So we begin with current ratio. The formula of current ratio is current assets upon current liabilities. The contents of current ratio are that current assets, which include cash in hand, cash at bank, marketable securities, debtors, less provision for doubtful debts, stock, then marketable securities, correct. Then the ideal ratio is 2:1. What is the objective and significance of finding out current ratio? That is to find out how able a firm is to meet its current liability. So ideally 2:1 means if the liabilities are 1, then current assets should be twice. Means whatever the amount of liability is, the firm should be having twice the current assets, so that it is in an advantageous position. Now we come to few questions. Now first one is, we are supposed to find out current ratio. Okay, in the question we are given trade receivables, prepaid expenses, cash and cash equivalent, marketable securities, and inventories. Okay, so current asset will come to 4 lakhs when we add the amount given of trade receivable, prepaid expenses, then cash and cash equivalent, marketable securities, and inventories. Then in the same way we are supposed to find out current liability, bills payable, creditors, and expenses payable. That comes to 2 lakhs. Now current asset, then regarding land and building, we are not going to take in current asset because land and building is a fixed asset. In similar way, we are not going to take debentures because they are long-term borrowing. And then when we are finding out, we get CA upon CL that comes to 2:1 because current assets are 4 lakh and current liabilities are 2 lakhs. So the answer is 2:1. Correct. Then come to the next question. We are given total assets, we are given fixed tangible assets, we are given shareholders fund, and we are given non-current liabilities. And at the same time, on asset side, we are given non-current investments. We are supposed to find out current ratio. So the formula for current ratio is current assets upon current liability. Write the formula so that you can score half the marks. Then current assets, total assets minus fixed assets minus non-current liability, and for non-current investment, and current liability, total liability minus shareholders fund minus non-current liability. Since total liabilities are not given and we are given total assets, so we can write the equation total liability is equal to total asset, that is 5 lakhs. And then you find out current assets and then current liabilities, substitute current assets and current liabilities, and you will get the ratio 2:1. Correct. In third question, we are given current assets. Okay. Then we are given inventories. Then we are given working capital, and we are supposed to find out current ratio. Since inventories are also already included in current asset, they are the part of current assets. So we are not going to take inventories again for calculating current assets. Now then we are given working capital. So learn a new formula. Working capital is equal to current assets minus current liability. Therefore we will get current liability is equal to current assets minus working capital. 5 lakhs minus 3 lakhs, you will get 2 lakhs. Now come to the question. Current ratio is equal to CA upon CL. 5 lakhs divided by 2 lakhs, you will get 2.5:1. Correct? Then the last question for today. We are given trade payables 50,000, working capital 9 lakhs, current liability 3 lakhs. We are supposed to find out current ratio. Now trade payables are already included in current liability, so we are not going to include that. Working capital is equal to current assets minus current liability. Find out current asset by the formula working capital plus current liability, and then already current liabilities are given. Find out current asset, and then you are going to get 4:1. So meet you in the next class. Till then, goodbye.